Good afternoon. This is Oliver Slope, Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of the 2-Minute Drill. It is the first trading day of the month, or I guess the first trading day of the month for the ag markets is officially in the books. Before we get into today's prices and headlines, do want to remind you, if you have not subscribed to our YouTube channel, head over to youtube.com, search Blue Line Futures, hit that subscribe button, and turn on those notifications. My other colleagues in the office put out a lot of great information throughout the week, not just in the agricultural space, but also the precious metals, energies, stock indices, etc. So head over to YouTube, give us a subscribe and a thumbs up. We appreciate your support. Now that we got that out of the way, we can go ahead and get into today's closing prices. And for grains, a little bit of a mixed bag. We started the Sunday night trade with a little bit of pressure, and then kind of looked like we were going to find our sea legs in the early morning trade, but that kind of fizzled out, and it was a relatively mute day, especially for that corn market. March futures down 1/2 cent, settling at 432 1/2. Over on the soybean side of things, January down 4 1/4, 985 1/4 to the settlement there. And on the wheat side, it was the March contract, 3/4 cent lower, 547 1/4. Important to note, where are we on the charts? For corn, we're basically just stuck in the middle of that October trading range. We do have trend line support coming in from those August lows, and that comes in near 428. So that's going to be kind of a must-hold line in the sand for us here going forward as we look to the end of the year. As far as resistance goes, 441 to 443. That's going to be a big pocket for the bulls to get out above there. If we can achieve consecutive closes, potentially that spurs some additional technical buying. And over on the soybean side of things, we're keeping a very close eye on those August lows at 973 1/2. We've kind of outlined 970 to 980 as a bit of a value zone, as an area on the chart where we've seen buying activity pick up. Whether or not that holds true in December, which is historically a seasonally friendly time of year, still to be determined. And then for wheat, just narrowly hanging on to those contract lows from August, and that comes in at 542. The low today, 542 3/4, so skating on some very thin ice on that front. Now, over on the fundamental side and headlines, we did get a flash sale this morning, 134,000 metric tons of soybeans for delivery to China. That's encouraging. A lot of people wondering, how's the market lower with flash sales? Well, this is basically pretty routine business. So we need to see bigger numbers to have a bigger impact on markets. We did have weekly export inspections this morning. That was largely in line with expectations. Corn, that came in at 935,000 metric tons. Soybeans, 2.1 million metric tons, and wheat, 296,000 metric tons. Again, all of those within the range of expectation, so not a whole lot to write home about there. This afternoon, here just a couple minutes ago, we did get an updated look at the Commitment of Traders report. That was new news. Typically, that's released on Friday afternoon, but due to Thanksgiving last week, we got that number today. Fund positioning in corn net long, about 83,900 futures contracts. Soybeans, net short, 58,000 contracts. Wheat, net short, about 61,000 contracts. Livestock market, that's where it's at. We'll get into the closing prices here, but while I'm on the Commitment of Traders, we'll touch on that. Live cattle, net long, 118,000 futures contracts. That is not a record, but certainly lofty. And the same can be said for feeder cattle, net long, 15,467 contracts. Very large net long position. And then lean hogs. Wow, 130,169 contracts to the long side. So aggressive length there. That doesn't mean they can't keep adding. It just kind of makes you wonder, most of the participants who want to be long are already long. Who's left to buy? You can see that volatility pick up when that buying turns into selling and long liquidation. I think we saw some of that in the feeder cattle market here this morning. We had a strong open and then saw that volatility pick up. And here's how we shook out for today's trade. February futures in the live cattle market, 70 cents lower to 187.92. Feeder cattle futures, that January contract, that was down 262 to 256.85. We were all the way down to 255 and change. We traded in about a $3 range in that opening 30 minutes. So again, when you get everyone on the same side of the ship, once people start to switch or neutralize some of those positions, you can see that volatility pick up. And then over on the lean hog side, and they just continue to defy gravity. That February contract, $1.62 higher to 87.95. Traded just a touch over 88, but really just kind of stalled out and fizzled out there. It'll be interesting to see what the rest of this week holds, as there's going to continue to be a lot of economic data later in the week, as well as just kind of talking heads, talking about end of the year positioning. So that's what we have for the first trading day of December. If you have any questions, feel free to reach out. My direct line, 312-837-3938, or you can email Oliver at bluelinefutures.com. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.